Manchester United is among the biggest brands in the world. Forbes values the club at $6.6 billion, but you can buy its shares at a market cap of just $2.7 billion.
Forbes valuations are pretty on point historically. And with Chelsea selling for over $5 billion, United should not struggle to sell at Forbes' $6.6 billion valuation.
The question, though, is whether the Glazer family actually wants to sell, and if not, what else can boost the stock price? Perhaps it's a new stadium, although it sounds pretty unlikely, but that could be a good reason for the stock going up significantly.
All right, folks, welcome back to the Intrinsic Value Podcast. Today, we are heading into territory that is a little different from our usual lineup of compounders. I've discussed a similar type of company before, but I actually think the conversation will come more naturally for Daniel than for me, and you'll see what I mean in a moment. But without further ado, we are talking about a sports team that doubles as a publicly traded stock. And it's not just any sports team either. It is one of the most famous sports franchises in the world, Manchester United. And some of our listeners may remember this, but all the way back in the very first episode we ever did on this show, it was actually on a sports team-based stock as well when I covered Madison Square Garden Sports, which if you didn't listen to that episode, then I should tell you they are the ones who own the franchise rights to both the New York Knicks and the New York Rangers. And as an NBA and NHL fan, that was a really fun case study for me, but this one will be more of an away game since I'm really not all that well versed on professional soccer.
Well, I mostly watch the Bundesliga, which is the German football league, so it's somewhat of an away game for me as well, but at least it's the right spot, right? I wasn't even sure if you would know Manchester United when I thought about pitching it, but it turns out that you do, and since it's the second most popular sports franchise in the world, right after Real Madrid, I guess that most of our American listeners will have heard the name at some point in their lives as well. I don't know what it says about me, but after United played the worst season in almost 60 years, I immediately thought, wait a minute, isn't United a publicly traded company? I guess I immediately sensed somewhat of an possible value investment. And although the underlying assumption here would be that what happens on the pitch also shows up in the financials and then later on in the stock chart, I'm not sure if that's actually the case. And I think whether that is the case is something we will discuss later today.
What's really interesting about today's pitch is trying to understand how the economics behind a soccer club work. And I got an idea of how it works for an NFL or an NBA team, but from what you've told me, there are some pretty significant differences. So I think it'll be very interesting to find out what those are and how they impact not only the financials, but really ultimately the valuation of a football club. And with MSGS, the stock would get a bit of a boost if the Knicks went on a playoff run because that meant more ticket and merchandise sales. But the valuation was pretty far divorced from the actual fundamentals, such that the stock didn't really ever move much except for when other major sports franchises were sold at higher and higher valuations. So just because they had a really good season didn't necessarily mean the stock was going to jump a bunch.
Without getting ahead of ourselves, on-pitch performance does play a larger role in soccer than in American football, but to bridge the value gap between Forbes' estimate, what United is worth, you need more than just on-pitch performance. You probably need rumors of a sale as well, although there might be one or two other major developments that could do it as well. So I'd say the main focus today will naturally be on United, but we will also learn a lot about the general economics of soccer clubs and honestly just sport teams in general. And the market values of both players and salaries and just the entire football or soccer industry, I haven't yet decided what I call it today, have exploded over the last decade. And I can already spoil that this is reflected in the numbers of sport teams and United as well. And United was the second club ever to surpass the 100 million euro transfer fee barrier for a player in 2016. And that basically means that they bought a player out of their contract with another club, paying 100 million euros to do so. And since that deal, 17 players have followed, and the most expensive one ever was Neymar Jr. He cost over $250 million. And usually how it goes is that players have release clauses in their contracts, and if another club is willing to pay them, they can negotiate the details of the new contract with the player and then buy them and sign them under their club. And in Spain, it's the law that every contract has to have a release clause. And since Barcelona, which is the club where Neymar played at the time, didn't want to sell him, they chose a release clause so high that they thought no one would pay it. But then came PSG, backed by Qatar, and said, you know what? We will pay $250 million for him. And that was such a huge thing back then. I still remember where I was when I heard of the deal. And it was on summer vacation in Italy. And back then, you didn't always have your phone with you. So I found out about the deal by walking past a sports magazine in a store with Neymar on the cover in a PSG jersey. And it just felt unreal at the time because no one thought this would ever be possible. And Barcelona at the time was the best club in the world, and Neymar was the upcoming world star next to Messi.
I'm trying to think of what the equivalent would be for a fan of American sports. Like the first thing my head goes to is when, the decision back in the day when LeBron decided to leave Cleveland and he went to Miami and he made this huge like ESPN announcement out of it. I don't know, that's sort of like when you're telling this story, that's where my brain goes. But anyways, I'm intrigued. I mean, it's not every day that we have an excuse to read up on our favorite sports while doing prep for our investing jobs. And just for me and maybe some of the other Americans who are not as dialed into soccer or football, as I should say, I think we'll be using those words interchangeably. So apologies in advance if that's confusing, but can you give us some history into how Manchester United came to be really as iconic as it is today?
Well, unsurprisingly, United has one of the longest histories in modern football. It was founded almost 150 years ago, back then as Newton Heath Football Club. It was just a team of workers for a railway company. And I don't know, perhaps Buffett should suggest that BNSF get their own team and they play in the MLS. But I guess it's the wrong sport and as far away from a Buffett investment as possible. And eventually, the name of Manchester United back then was changed because the team ended up struggling financially and it was saved by local investors. And they decided to rename the club to what it is today, Manchester United. And I should say it's not uncommon for football teams to have been founded as company teams. So just 2 years ago, Bayer Leverkusen won the Bundesliga, and for the first time ever, it was a team who went on an unbeaten run. And Bayer Leverkusen originated as a company team for the German pharma giant Bayer. And even today, it remains financially backed by the company, which is obviously a very lucrative thing for the club.
The roots of American football are definitely more college based, but there are these certain teams that did kind of start as company teams as well. I think the Green Bay Packers is the main example of that, where it was founded by employees of the Indian Packing Company. But that relationship ended more than 100 years ago. So it really does not have a financial impact on the team anymore. And actually, it's kind of funny. I mean, technically, you can buy shares in Green Bay too, but it's more of a novelty. It's not like a legitimately publicly traded company. I don't think the shares give you any real ownership stake of the team. And it's almost more of a way of like just expressing your loyalty as a fan. Or it's kind of, from my perspective, it seems like you're just donating money to the team. But I'm kind of a skeptic. I am a bit surprised by these corporate relationships, though, and the fact that they are still such a factor for the German clubs you mentioned. I mean, you've told me previously that investors in the German Football League are not really allowed, and it seems there's this kind of culture in soccer that is averse to commercialism, and then yet, ironically, some of these clubs are very directly influenced by large corporations.
That's definitely true. I mean, they're only allowed to a certain extent. There's a so-called 50+1 rule, which basically means that members of a club need to hold 50% plus one more vote. So basically, that means the clubs and by extensions, the fans have the ultimate say in how they are run and not any outside investors. There have been huge debates, though, about this rule since many officials in football organizations wanted to be changed just to be more attractive for outside investors. But after a full season during which fans protested by throwing tennis balls onto the pitch or even driving remote-controlled cars with smoke grenades onto it during the games, this rule change was ultimately repealed. And the fans are worried about football kind of going the same path as the Premier League, where investors have taken over many clubs, and it did change the culture enormously.
Well, we've seen private equity start to buy up minority stakes in the NFL recently after rule changes. And I get it because owners want these capital infusions to upgrade their teams or to cash out part of their stake without necessarily losing control of the team. You can also imagine that fans don't want their beloved sports teams going from being relatively family-run enterprises to these ruthless for-profit companies pressured by outside investors to deliver certain results beyond the extent to which that already happens, and they're already very profit-focused. But, just based on your tone, Daniel, I can kind of sense that maybe there is some rivalry between the German and the English leagues.
There might be some tension there, yes. But jokes aside, I mean, in England, it's just much more common that football clubs are financed by investors, either companies, individuals, or even states like Saudi Arabia. And this obviously pushed billions of dollars into the clubs. I compared the financial statements of the leagues in the last transfer window. And by the way, in European football, player trades aren't open year round like in US sports. Instead, clubs can only buy and sell players during specific periods, so called transfer windows. And there are two each season, a longer one, which is called the summer window, which usually goes from June to August before the season starts, and then a shorter window, which is called the winter transfer in January. And during these windows, clubs can negotiate transfer fees and contracts to sign new players for their teams, and outside of them, squads are essentially locked. Among the 5 major football leagues, the English, the German, the Spanish, the Italian, and the French, all but the English league closed the transfer window with either slight deficits of $60 to $90 million or surpluses ranging from $200 million to $400 million. The English league, though, ended the transfer window with a deficit of $1.8 billion. That's almost $1 billion more than the previous record set, and that was just 2 years ago. And Manchester United alone had a deficit of about $200 million for this transfer window.
I think that is pretty scary for any prospective investor, right? I mean, how often do players not deliver the way fans and coaches hoped? And when clubs are paying hundreds of millions of dollars for players and increasingly for just a single player in some cases, I mean, that is a very risky and concentrated bet. Even if they're not a bust, there's always a chance that a freak injury can derail someone's career entirely. And in North American sports, we don't have these transfer fees in the same ways necessarily, but instead teams can swap players or draft picks, but you don't buy out players out of contracts with hundreds of millions of dollars on the line.
It's one of the major differences between the US leagues and then European football leagues, but not the most important one, I would say. Todd Bowley is an American businessman, and he owns minority stakes in teams like the LA Dodgers and the LA Lakers, and also the London football club, Chelsea FC. And he's famous for the buying spree he initiated at Chelsea, spending over $1 billion and buying so many players that some have to play in the second team because they don't even fit into the squad anymore. And he once gave an interview on how he thinks of investing into European football, and it's pretty interesting. So here's a sneak peek of what exactly he said.
I mean, I think there's no bigger sport in the world in terms of demand, right? And you go anywhere in the world and people know the top football clubs. And even in the U.S., I think the time slots that the Premier League has, in the U.S. on Saturday and Sunday doesn't really compete with anything.
Right.
Right. And obviously the NFL is trying to figure out how do I do more games in London and Munich and places like that, because of course that works really well for them, because then you wake up and you have breakfast with the NFL.
Right.
But that's every week, with the Premier League.
Right.
It's probably a good time to go deeper into the difference between football leagues in Europe and specifically the Premier League and then the major leagues in the US. Because when you look at the Forbes list of the most valuable sport teams, it's one NFL franchise after another. And that's despite football or soccer, I've not yet decided what I call it today, being the most popular sport in the world. I mean, there are some very obvious reasons. And instead of one big league, for example, you have a national league in every single country. So you have a lot more clubs that basically split the money soccer as a sport makes between them. And then you have a similar effect to many of the businesses we talked about before on this show, where the ARPU, so the average revenue per user of a US viewer, is significantly higher than in most places in the world. So taking Manchester United for an example, this is a global brand. After the huge successes under the legendary manager Sir Alex Ferguson, United was known around the globe, and if you go through any ranking of the most famous sports clubs in the world, you will see Manchester United among the top ranks, only topped by Real Madrid and, depending on the ranking, Barcelona.
I think the only thing I know about ManU is that I sometimes see folks wearing their jerseys, and I remember it being a team to use actually when I'd watch friends play FIFA when I was younger, but that's it. I'm probably a bit more oblivious about soccer than some Americans. I mean, there certainly are some folks I know who are very, very into soccer, but it is always funny to think that FIFA as a video game was actually really popular and common to play growing up, but that didn't really translate into a lot of folks watching soccer in the same way. And we'd play FIFA in the morning, and then we'd put NFL games on in the TV in the afternoon. And so there was this kind of really interesting disconnect there that I bet a lot of people in the US our age can actually probably relate to, which is even funnier still because it feels like everyone grows up here playing soccer as one of their first sports in the US as a kid, but they graduate onto other things like basketball, baseball, or American football, or at least that's what me and most of my friends did.
Shawn, you never said that. I didn't know you played FIFA as a kid. I knew you said a lot of people start out playing soccer, but FIFA is, I mean, now that I know that, I should probably bring FIFA to Montana so that we can play around together, because that's a game I spend hundreds of hours with, maybe even thousands. But
I think you'd crush me.
maybe, but I stopped playing a couple of years ago, so maybe it's more balanced now. But the problem with being a global brand, as United is that you have a lot of fans and viewers outside of Europe and in markets that are just much less valuable to a sports franchise in the European home market or especially the American market. And there are not that many ways to monetize the brand globally, at least not yet. So the most important thing is how well your national league is monetized. And the NFL is an incredibly profitable league. They have dominated the top 10 of the Forbes list pretty much since the list has existed. And Manchester United only comes in at place 14, although the valuation should give hope to shareholders because Forbes estimates United to be worth about $6.6 billion. And that would imply more than 100% upside on the current market cap if you just look at where Manchester United stock is trading.
And the other thing is that comparing Europe as a single market to the US just does not work in the same way. I mean, obviously the US is fragmented by states that are all a part of the same country, which makes its addressable TV audience more ubiquitous and valuable to advertisers correspondingly. While in Europe, as we know it, it's divided amongst dozens of countries with different cultures, obviously, from languages, demographics, and regulations. Those can all differ to a much larger extent than you would see in the States. Even on, polar opposite sides of the country, you still have at a minimum the same language, the same federal regulations, and the same legal system that provide this kind of commonality. But, the point being, the NFL and its franchises almost earn a premium in a way compared with European football clubs that have more global reach, but across more fragmented markets. And, they only truly dominate some of these smaller markets like the UK, Italy, or Germany specifically.
It's definitely a major point. I believe one reason why the Premier League turned out to be the biggest football league in the world is simply because of the language. In Germany, Italy, or Spain, press conferences, for example, are still in their own language. And that is just not attractive for international audiences. And I think that's a huge part.
And for anyone wondering whether you can trust the Forbes list at all, they actually have a pretty good track record of estimating the valuations of sports teams. They can even be a bit on the conservative side of things. When I looked at Madison Square Garden Sports Company for the first time ever on this show, I found this interesting statistic showing that from 2021 to 2023, 15 teams in major U.S. sports leagues sold partial or full ownership stakes that, on average, were at a 17% premium to Forbes' estimated valuations. And I'm not sure if that translates in the same way for international sports, but since Forbes is not really using any kind of black magic here, they're just going off, basic formulas of historical sales and multiples, I would suspect the track record holds up pretty well. And what makes a Premier League investment interesting is really the international audience that you mentioned. And not only is that audience across Europe, but it's all over the world. And right now, the difference between monetizing international audiences might still be a challenge, and maybe it will be for quite a while. But over the long run, as people everywhere become wealthier, international attention should naturally become more valuable, whether through more and higher priced merchandise or just more lucrative broadcasting deals. And to give a sense of the scale we're talking about here, a couple weeks ago, we compared the viewership of the World Cup to the Super Bowl. And honestly, I could barely believe the numbers. I mean, the most recent World Cup, it reached a peak audience of 1.5 billion people for the final. And by contrast, the Super Bowl, which feels massive here in the States, tops out at closer to just 200 million people. And even if you go for more apples to apples comparison, like the Champions League final versus the Super Bowl, the numbers are still pretty breathtaking. The Champions League final still pulls in somewhere between 500 and 700 million viewers worldwide.
Unfortunately for United, though, they haven't been part of a Champions League final for 17 years now. And despite the global reach of football, American sports, and specifically the NFL, they still have the most valuable franchises overall. And there are really three big reasons why they dominate those rankings. The first one is simply the economic power of having a US only audience, as we just said. But the more important reasons, in my view, are the advertising opportunities and the structure of the game, or more precisely, the structure of the leagues. Americans are among the highest spenders worldwide when it comes to sports events. And if you think about the Super Bowl, a big part of that spending and attention isn't just the game itself, it's the entertainment factor that comes with it. If you are not a soccer fan, there's really no reason to sit through a Champions League final. There's no halftime show or any iconic ads that run in between, but the Super Bowl, it's almost more of an entertainment event than a sports event, at least from an outsider's views. I mean, the peak viewership isn't even during the action on the field, it's where the halftime show begins. And then there are the ads, which have basically become a part of the cultural experience. I mean, the best ones go viral in the days after on social media, and companies line up to pay as much as $8 million for a single 30-second slot of airtime. And that entire culture is missing completely in soccer. Fortunately, I must say, as a soccer fan, and I would include myself here, I don't want halftime shows or a lot of fuss around the game. I think whenever artists perform before a football game, a European football one, there's just a booing concert. In soccer, it generally is the case that the fans are responsible for the show, so they create these huge choreographies that can cost hundreds of thousands of dollars or more, and tens of thousands of people get involved in them. And the point being, although soccer organizations push for more entertainment and commercialization, fans try to keep that out of soccer for as long as possible.
Even Einstein had blind spots. That's why modern science is built on the idea of peer review. Investing may be more art than science, but that doesn't make peer feedback any less valuable. The tricky thing is finding qualified people who are interested and willing to help vet your investment ideas. That's why we built the Intrinsic Value community. It's a place to connect, share ideas, learn, and get feedback. Nobody ever wishes they'd spent more time buried in spreadsheets, but connecting and building relationships with others who may be smarter on a topic than you, but who are also schooled in value investing, that's valuable. We make spots in this exclusive community available in cohorts every few months, and last time around, our 30 available spots filled up pretty quickly. If you're interested in our next cohort, which will be even smaller, you can join the waitlist at theinvestorspodcast.com/intrinsic value community. That's theinvestorspodcast.com/intrinsic value community. Look, every hunter, camper, and backpacker needs one of these. That is a Harvest Right freeze dryer, which lets you preserve your own meals and snacks. It's perfect for your next backcountry adventure or hunting trip. You can fuel your adventure with freeze-dried strawberries, bananas, pineapples, and even full home-cooked meals. No more relying on expensive store-bought, preservative-packed food. You can also preserve wild game with your Harvest Right freeze dryer. That's right, take control of your harvest by freeze-drying venison, elk, or fish, so you'll always have high-quality protein ready to go. And your pets will love the freeze-dried treats too, just like my dog Riley. Freeze-dried meals are lightweight and long-lasting, staying fresh for up to 25 years, yet they taste just as good as the day you made them. Whether you're hunting, camping, or prepping for emergencies, a Harvest Right freeze dryer keeps you ready for anything. It's like having extra cash in your portfolio to take advantage of downturns in the markets. That's how I think about it, at least. Learn more by visiting harvestright.com/investors. That's harvestright.com/investors. Just like everybody else, there was a time when I was a beginner investor, and I have to say, investing is particularly filled with jargon that can just make it so difficult for new investors to understand what is going on. But it's never too late to get smarter about stock investing from the ground up. At the Investors Podcast Network, we've made a habit of studying the world's best investors, and now I'm distilling those learnings into a simple course for you, or for anyone in your life who you might want to share the gift of knowledge with. With my How to Get Started with Stocks course, you can master the principles of excellent lifelong investing with valuable insights for both beginners and pros. The course covers 10 different sections, beginning with the basics of what a stock actually is and how the stock markets work, to strategies to optimize your retirement savings, how to pick great companies for the long term, what to look for in ETFs, and how to monitor your investments, plus so much more. To begin getting smarter about investing, just visit theinvestorspodcast.com/get started with stocks. That's theinvestorspodcast.com/get started with stocks. And for a limited time, you can use code STOCKS15 for a 15% discount at checkout. I'm biased, but Man, the NFL does such a good job with producing an entertainment product. I think we can differ on whether people actually enjoy watching the sport or not. But I mean, the whole thing is just a giant spectacle. And it really is amazing to me what they're able to pull off in real time for the broadcast, all the camera angles, the music, the sound effects, the on-field reporters, the halftime shows, incorporating highlights mid-game, like immediately after a play happens, you've got, multiple different angles of highlights prepared. There's just so much that goes into the game and really the watching of the game, the viewership, and they make it look so easy. And while they do it in a way that just really squeezes out every opportunity for an ad. I mean, whether it's on the field with banners or, commercial breaks, whether you're fully going to commercial break or commercial break for 30 seconds where you can still see the game, but you can't hear the audio. And then the other half of the screen has a commercial. There's just all of these elaborate ways they have found opportunities to increasingly monetize NFL viewership. And I always complain about all the ads, and yet I do keep watching. The actions speak louder than words. All those ads have not driven me away as a viewer. And, in my opinion, and I think there are tens of millions, if not hundreds of millions of Americans that would agree with me, the NFL is just such a good product. It would be almost unfathomable for me to not watch. Every time I feel this instinct to rebel and say, I'm tired of the ads, I'm sick of it, I don't want to pay for all these different streaming subscriptions, I don't want to pay for cable, I try to step away and I'm going, God, I really wish I could see the end of this game right now. So with the point being, beyond the differences in the audiences and the culture, there's just so much more promotion baked into NFL games structurally that of course they're going to be way more monetizable. And, that's going to translate to more value for the franchises. NFL games are almost like a shrine to capitalism. I think if you watch the games through that lens, you see it very differently. And I totally get why that's a turnoff to people like you, Daniel, especially for international viewers who don't grow up watching the sport and have the same nostalgia around it. But from a business perspective, I gotta say, I respect it. No one gets as much revenue out of every second of game time as the NFL. They have really mastered it. And the benefits trickle back to the teams and the franchise values, of course, like I said. And, we're supposed to be talking about MANU, but now I'm sitting here wishing I had a chance to own an NFL franchise.
I would guess it's only a matter of time until we get the chance to actually look at an NFL franchise. But speaking of optimizing the sport for capitalism, actually brings us to the second point, which is the structure of the game and even more so the structure of the leagues. And this is really interesting because you would think that if the US has basically cracked the code on how to monetize sports, then all the leagues would be valued more or less the same, with only slight differences based on popularity or viewership, but that's not really the case. The NFL, just like the NBA and Major League Baseball, is a closed league. There are 32 franchises, and those 32 spots are pretty much fixed. So no matter how bad your season is, even if you finish dead last, you're still in the league the following year, and you will still collect your share of those enormous TV contracts. And when you look at European leagues, that's the complete opposite. If football operates in an open system, and that means if you finish at the bottom of the Premier League, you get relegated down to the second league, and with that, you lose out on hundreds of millions of dollars in revenue.
When we put on our investor glasses, it kind of feels like the difference here is between owning a stock where your downside is capped with an NFL team, for example, versus one where if things go really badly, you can get booted off the exchange altogether. So there's almost this asymmetry to the downside that's a low likelihood with a team like Manchester United, but the possibility exists in a way that, there's not even a minor league for NFL teams. And even if, for the NBA G League, the Lakers are never getting relegated to the G League because it's just literally not possible.
And we'll still talk about it later, but United was pretty close to get relegated. And the closed league system in itself is just one piece. The NFL also uses salary caps, so every team can only spend more or less the same amount on player salaries. I think about $270 million in recent seasons. In the Premier League, though, there is no cap, so Manchester United can go about and spend almost $250 million on wages in any given year, but smaller clubs like Burnley, for example, which you definitely do not know, spend less than $70 million on player wages. And you could almost say that American sports leagues are more socialist and European leagues are more capitalistic. But the second level thinking here is that competition is much more interesting in American football than in European football, which again is way better for a capitalistic system. And so the Premier League has a relatively open title race each year, and relatively means there are like 4 to 5 clubs that actually play and have a realistic chance of winning the title, whereas in most other European leagues, they're basically dominated by just 1 or 2 big clubs. The German league, for example, is dominated by Bayern Munich, the French league by Paris Saint-Germain, and the Spanish league by Real Madrid or Barcelona.
Yeah, there is sort of a more egalitarian approach to like the NFL, for example, where almost by structure, the league does not want the same team to, obviously you have a couple years in a row where the same team will be good, but they don't want just year after year, decade after decade of the same franchise dominating. And there's subtle ways where, for example, with the draft pick system, if you're the worst team in the league, you get the first pick of the next best class of college players rising up. So that is a great way to get the next big superstar on your team and lift your franchise up. Whereas, the team that won the Super Bowl, they pick last. And so they get, last dibs on the next cohort of talented players. And then you have these things with the salary cap where, if you have a star quarterback, for example, my team that I root for, the Washington Commanders, they just drafted this great quarterback, Jaden Daniels, and he's really promising, and he's on a rookie contract, which means he's not getting paid a ton of money. But when we have to go and re-sign him, he's going to get this massive contract, which is going to make it harder for us to pay anyone else. And so, maybe we're good now, but you have this limiting factor of, with the salary cap, you can only spend so much. And if you want to keep the star players that you've groomed over time, you're going to have to eventually pay them what they're worth. And that just translates to, like I said, this more egalitarian system where just because you're really good one year does not mean you'll be really good for the next 5 years. And I think that's proven out by the fact that in the past decade alone, you have 6 different teams that have managed to win the Super Bowl. And in my opinion, that makes the NFL more exciting to watch for fans and for all the teams involved. And from an investor's point of view, I think it's very attractive as well. Every franchise is guaranteed a meaningful slice of the pie. No team has to fear that they'll make significantly less money next year. And even the more casual fans will tune in whenever the playoff race heats up. And, we have these teams like the Lions, for example, the Detroit Lions that for decades were just absolutely terrible. And that's still a multi-billion-dollar franchise that I don't know if they sold out games for a long time, but still got a lot of attendance, a lot of fan support. And then now, in the last 2 years, you've seen them become really, really good. And, you have all this pent up almost spending that, people who suffered through the team's bad times for years, now their time has come, and they're as big of fans as ever. So like I said, it really balances out in a way that I think is a little bit different than some of the European football leagues, at least from what you've told me. And the title race in European football leagues is sometimes already decided weeks before the season ends. And again, that's just kind of the opposite of, the kind of the fervor around the NFL accelerates as you get closer to the end of the season and as the playoffs come around. And, to be fair, I think the relegation, though, does add a bit of excitement or kind of a variable to the equation that North American sports leagues don't have. If your club needs to score points or they go down a league, I mean, that would be pretty nerve-wracking, and that would definitely, have me tuning in to see what happens.
Shawn, I can tell you from experience, unfortunately, that is as nerve-wracking as possible if your team is still fighting to not get relegated in a different year. I mean, one question we still haven't yet fully answered with all of this is why the NFL is so much more successful economically than, say, the NBA, for example, even though they operate under pretty similar rules. And that mostly goes back to how the NFL embraced television, even back in the 1960s. They made what was a pretty revolutionary decision at the time because they said instead of selling the TV rights based on the size or the importance of the team, they collectively sold them and split the money equally among all the teams. And that's basically what you alluded to. And that's the reason why even a small market team like the Green Bay Packers, which we talked about earlier, could grow the same way as the Dallas Cowboys or the Miami Dolphins. And when you combine that equal TV money with the scarcity of games, every NFL match becomes a must-watch event. And a couple of weeks ago, you mentioned to me how you're looking forward to the season, and I could barely believe how short this season for NFL teams actually is. I mean, only 17 regular season games per team. Compare that to the Premier League, where you have 38 games, plus cups, and then also international competitions, which can easily push that number up to at least 50. Or the NBA with 82 games. And I still remember when I met one of our Intrinsic Value community members in Omaha at the Berkshire meeting this year, and he told me that in baseball, they play over 160 games per season, which for me was totally mind-boggling.
Speaking of which, just since you did mention our intrinsic value community, I think I'll take a moment here just to let everybody know we are taking applications for our third cohort of members who are looking to join the group. We originally opened up 20 spots, and almost half of those are already gone at the time of recording. So if you're interested in digging deeper into the investments that we do here on the show, meeting like-minded investors, and as you just alluded to, Daniel, joining us for our meetups in Omaha and Berkshire Weekend, or our weekend in New York that we're planning for fall of next year, we have a link to apply in the description, or you can go straight to theinvestorspodcast.com/intrinsic value community.
It's definitely worth checking out, I would say. And perhaps I'll book an extra day next time I'm in the States for one of our community events just to visit an NFL game. I think just experiencing how a game with that many breaks feels alive is something that I wanna see. The Premier League didn't sell its games on television in a big way until the 1980s, and by then, the NFL had already optimized its spot for TV. I'm talking about timeouts, replays, Monday Night Football, Thursday games, all to maximize ad slots and viewer numbers. And today, the NFL TV rights bring in over $10 billion annually, far more than the Premier League's $2 billion.
I mentioned this earlier, but the NFL has probably done the best job in the world when it comes to setting up games in a way that allows for the maximum amount of advertising and monetization to occur. About 25% of an average NFL broadcast is commercials. And the 50 minutes of commercials are distributed over 20 commercial breaks. And I've actually heard that the average NFL broadcast, which, as we know, can go for 3 or 4 hours, only delivers 18 minutes of actual live play, 18 minutes of, actual action, since there is a lot of this time, before the snap, and then there's runoff between plays. I mean, that probably sounds terrible to all the European listeners who are used to uninterrupted 45-minute halftimes, but it really is part of the sport and the culture around watching it. I mean, sometimes the ads themselves are actually pretty entertaining to watch. And then there's this communal culture around watching football where you have, tailgates and backyard barbecues, playing fantasy football with friends. I mean, the breaks in action kind of actually really open the door for socializing. And the other thing is that, really devoted fans will spend a lot of time switching back and forth between games with something like NFL Red Zone or, NFL Sunday Ticket. So if your team is on a commercial break, you're not just sitting there suffering through every single commercial break. You're probably checking in on 3 or 4 other games to see what's going on. And I'm not sure how that's different from how people consume soccer or football in Europe, but there is kind of a league-wide interest in the NFL. Like I said, you're maybe not just tracking what your team is doing, but you also want to see, since a lot of the games are being played at the same time, what's going on with Josh Allen, and how is Patrick Mahomes playing, and how are the Cowboys doing? Is my division rival losing? Stuff like that I think people are actually kind of add to the experience of an NFL Sunday, where it's not just watching one game and watching your team, but it's a whole day of American football.
It's definitely the same here. I think the most watched product is a so-called conference in which you jump between all the games that are currently on. The only problem from an economic standpoint is that halftime is at the same time for every team, and that's the only ad break. So you just can't skip any ads by switching to another game, and there are no more opportunities to make more money for the clubs and the TV broadcast. So economically, and we said that repeatedly, the NFL model is just so much stronger that it's no surprise officials have tried to steer European football in the same directions. A couple of years ago, they actually announced the idea of a so-called Super League, and it was supposed to be a close competition, just like the NFL, featuring the biggest clubs from each of the top 5 European leagues. And the domestic leagues would have still continued, but the Super League would have replaced the Champions League as the main international competition. And the idea came out of a clash between the 2 biggest organizations in world football. But what's more interesting for us is that the economic logic behind this is so compelling. The driving force behind it was Florentino Perez, who is the president of Real Madrid. And Real Madrid is the most decorated club in football. And financially, they're right up there with the Dallas Cowboys as one of the very few franchises on earth that generates more than $1 billion in revenue each season. And United would have been part of the Super League as well, despite their not so good sporting performance each year. And the Glazer family would have been involved in the league's board. So for clubs like United, where the qualification for the Champions League isn't always guaranteed, a closed Super League would have meant much more stable earnings and just significantly higher broadcasting revenue each year. If this were to happen in the future, Manchester United's value would likely experience a significant increase, much more than you could expect from just good on-pitch performance. But for now, and that's kind of the bad news here, the project was stopped when clubs backed out due to serious fan protests.
So tell me if I'm mistaken, but it sounds like qualifying for the Champions League and really just overall performance on the pitch plays a pretty big role in the financials of these football clubs. And that's a big contrast with the NFL, where, as we've talked about a little bit, on-field performance, of course it matters a ton, but it doesn't really move the financial needle maybe in the same way, since all the TV money is pretty much split equally no matter what. And then you have the salary cap that prevents hoarding of the best players at one team. And then the worst teams will get the best picks the next season. The Cowboys are the most valuable franchise in the NFL, and they have not been to a conference championship game in like 3 decades. They haven't been good for a while. And as a Washington Commanders fan, that brings me some joy to say, since they are our rival. But, maybe we should dig into the consequences of this kind of on-pitch performance a bit more, and what it does mean for European football clubs. From what I know, Manchester United's glory days are also a bit behind them as well. Maybe they're kind of like the Dallas Cowboys. They haven't exactly been lighting it up in recent years. So how has that lack of success actually shown up in their finances?
Well, for soccer clubs, performance really is a key part of the money-making machine, and we'll get into those dynamics in a moment. But since I just mentioned the Glazer family and their role in the Super League, it probably makes sense to briefly talk about United's owners in more detail, because it's the Glazer family, and they are investors who you might know because they also own the Tampa Bay Buccaneers, and they acquired Manchester United through a leveraged buyout about 20 years ago. They borrowed hundreds of millions using the club's assets as collateral, which loaded United with about $800 million of debt. And given what you know now about 40 minutes into this podcast on basically football and sports culture, I guess you can imagine that fans were more than just not happy, and it came to massive fan protests once again.
I won't pretend I know much about the Glazer family, but I do know the Buccaneers have done decently well under their ownership. The Bucs have won 2 Super Bowls since the Glazers took over, one of which was famously with Tom Brady a few years ago. And they're also known for some philanthropic contributions to the community in Florida and Tampa. So maybe I'll just put it this way. There are definitely owners who are much, much more disliked than they are in the NFL.
Interesting, because their image in the UK couldn't be more different. They don't really give interviews, so there's just not much you know about them or their personalities. And since the legendary coach Sir Alex Ferguson, who I referred to earlier, left United in 2013, the on-pitch performance just kept getting worse almost every single season. They haven't won a single league title, and last year, as I said, they finished 15th in the league, and they almost got relegated. There are numerous examples of prominent and historic clubs with massive fan bases that have been relegated once, and they never returned to the top. And not only in England, but in all major European leagues. And as a Hamburg fan, I know that fear too well. After being the only German club to never be relegated from the first league, it happened for a first time 7 years ago. And let me tell you, Shawn, getting back into the first league was a long, long journey. And the financial burden of relegation is just huge. It's been estimated that if Manchester United had actually been relegated last season, they would have taken a hit of around $80 million in broadcasting revenue alone. And since the club didn't have to think about ever getting relegated, they don't have relegation clauses with most of their sponsors, so it's difficult to assess how much money they would have lost on the commercial side. But due to their size, that's a big part of the United's business, almost half to be exact. And if you look at other established clubs that did get relegated, the drop in commercial revenue was often around 30%. For United, that would have been another $100 million or so that they would have lost immediately.
Before we started this discussion, I really wouldn't have thought the structure of the leagues and all these financial rules played such a big role in explaining why NFL or NBA teams ended up being worth so much more than soccer clubs. And I would have assumed almost all the difference came down to advertising opportunities and maybe just the sheer size of the US market. But when you look at the massive revenue swings, missing out on the Champions League or, in the worst case, getting relegated, even for billionaires who don't always care about short-term profits, they probably have to think twice before investing in some of these clubs. And I mean, that kind of potential hit is just too big to ignore. And I'd imagine you also see pressure on the match day revenues, right? I mean, maybe fewer fans are showing up or clubs are being forced to drop ticket prices if the teams are relegated.
Well, football fans are usually very loyal. To bring up Hamburg again, even after 7 years stuck in the second league, they didn't see any real drop in matchday revenue. The stadium was still packed with almost 60,000 fans every single week, and ticket prices didn't have to come down either. So I would assume a club like Manchester United wouldn't see much of a decline in matchday revenue either. What would be more damaging is the gradual loss of prestige that just comes with playing outside of the top league of the Premier League. And maybe not just after one season, but the longer it drags on, the more it chips away at United's brand value. And for the financials, the on pitch performance of football clubs is definitely important. Central TV and commercial money do include kind of like an equal floor, but that floor is far smaller than the NFL's. And a notable share of the payout depends on where the team actually finishes the season and in the league, because that also means how many live broadcasts they get. And last season, every Premier League team received about $120 million as its central TV share. And then on top of that, each position in the table was worth another $4 million. And if you qualify for the Champions League, you get an additional $22 million just as a starting fee, with the potential to earn much more depending on how far you go to be pretty big. Now, United has been pretty far from consistent Champions League qualification in recent years, but I still went through the payout rules to see what it might look like if they qualify. And without boring you with the math, just from making it out of the group stage, United would pocket around $100 million. Reaching the quarterfinals would put that number closer to $120 million. And if they went all the way, which, let's be honest, would be a football miracle by now, they could add another $50 million on top. So point being, if you're a club that reaches the Champions League often, chances are you also pay salaries and make transfer in a different category than other clubs. And when you suddenly miss out on $100 million because you don't qualify for the Champions League, that just becomes incredibly expensive for the club.
Not only are the stakes super competitive from a sports perspective, but so are the economics. I mean, we've said it a few times already, but when you buy an NBA or an NFL team, it almost feels like you can't lose. You know the sport is only going to get bigger and the teams will continue to appreciate, but you don't know that in the same way for MANU. So naturally, there is kind of an additional premium in the valuation of North American sports teams comparatively, because I think there is some more certainty at the franchise level. It's sort of like how these like recurring subscription businesses command higher PEs than cyclical businesses. That stability from an investment perspective is actually very valuable. And zooming into Manchester United in particular, maybe you can give us a breakdown of how big each of its different income streams are.
There are three major revenue drivers. So that being commercial, broadcasting, and matchday. Commercial is the biggest chunk, making up about 45% of the total. And that's all the sponsorship deals, the retail operations, and also the merchandising. So basically, it's a part of the business where United monetizes its global brand. Broadcasting is the second biggest pillar, worth roughly a third of overall revenue. And this is where the performance on the pitch matters most. League position, Champions League qualifications, all of that flows straight into the broadcasting line. And as you would expect, it's also the most volatile part of the business, especially given how inconsistent United has been in recent years. And then the third piece is matchday revenue. Over the last 5 years, those numbers have looked pretty up and down, but that has mostly been due to the pandemic. In a normal year, matchday revenues are very stable for United. The stadium, which is called the Old Trafford, is packed every single week, and there's no sign of that changing anytime soon.
Speaking of profitability, is Manchester United even a profitable company? I mean, when I hear about all those transfer fees, the wages to the players, and then just some of this missed on-pitch success, I feel that there's maybe not much left over at the end of the year for shareholders.
Well, unsurprisingly, the two biggest cost lines are wages and player amortization. Wages alone are more than half of revenue, and that's actually an improvement. A couple of years ago, wages were still running at about 66% of revenue, so roughly 10 percentage points higher than they are today. And then you've got the amortization of player contracts, and that's basically just the accounting treatment of transfer fees, spreading them or the cost out over the life of each player's deal. In 2024, that line came out to about $250 million. And when you add wages and amortization together, they eat up about 80% of the club's income before you even factor in anything else. And last year, on top of that, you had some additional one-off costs that were tied to the Jim Ratcliffe takeover, because Sir Jim Ratcliffe is a British businessman and he bought 27% of United and took over control over the entire football operations. He paid $1.6 billion for that stake, implying a valuation close to $6 billion.
So taking it all together, it does sound like they operated at a loss. Is that right?
Yep, that's true. It's a total loss of over $100 million. And there generally are not many years in which United is operating at a loss, although the league is trending towards more profitability in general.
I know this might sound unattractive to many investors, and as value investors, we obviously don't like loss-making companies either, but you don't really buy these assets for their operational performance. These clubs are trophy assets for the ultra-rich, which is something we talked about at length during the Madison Square Garden episode that we'll link to in the show notes for anybody who wants to check that out. But it is really like buying art. I would say you're not really, even though there are cash flows, you're not really investing in it for the cash flows. You're buying it for the expected appreciation. You're hoping someone will be willing to pay more for it down the road, since there are some serious bragging rights that come with owning professional sports franchises. And, historically, that has actually been a pretty good bet. And while that can work, I don't think either of us would say it fits our definition of investing, let alone value investing. It really is more akin to speculating, which is not necessarily gambling, but speculating. Speculation, in my definition, is when you're betting on something to be worth more for reasons other than the discounted value of the cash flows it can generate. So this is not a slight against gold, but by that definition, gold is a speculation, which is okay, but that is sort of what it is because it's not being valued like a business in terms of the discounted future cash flows that we expect the business to be. So it doesn't necessarily make it gambling though. And with MANU being unprofitable and having real no pathway toward being consistently profitable, that's why I say it starts to look more like a speculation. It starts to look more like buying gold, which, in a diversified portfolio as part of different, wealth accumulation and protection strategies, there is a role for that, just to be clear. But it's not like we're trying to look at Uber's cash flows over the next decade and do a DCF and say, we think Uber is worth $100 a share or whatever it is. It's a very different way to think about it. And yet, at the same time, using Forbes' valuation estimates does imply 100% upside on today's stock price. And it looks like the Jim Ratcliffe deal is another example that investors are willing to pay closer to $6 billion than the $3 billion the market is currently willing to pay for United based on the implied valuation. We just multiply the number of shares outstanding by this share price. So with that said, do you see anything that could close that valuation gap anytime soon?
Well, the valuation gap isn't going to close just because of better results on the pitch, not even if United makes it back into the Champions League. I would say the most likely way is through a sale of the club. That's not only true for United, though, that's true for every sport franchise out there. As you said, this is kind of the speculation part of the investment. Even the more profitable teams or NFL franchises get sold at valuations that are hard to justify if you just look at the financials and the operational perspective of the club. And a couple of years ago, United's market cap actually jumped to over $4 billion on rumors that the Glazer family were exploring a sale. And there were two serious parties involved back then, a Qatari investing group and, as you said, Sir Jim Ratcliffe. And the Qataris were reportedly willing to buy the entire club at a valuation of $6 to $7 billion, which lines up with Forbes' value estimate. But apparently, the Glazer family hesitated. Some family members seemed interested in selling, while others apparently weren't. And maybe that was just a negotiation tactic, but whatever was the reason, the sale did end up not going through. And reports suggested that the Glazer family wanted $8 to $10 billion, and the Qataris just decided to ultimately walk away because that's just too much money for a struggling Manchester United team. And Ratcliffe later came in and bought about a quarter of the club at an implied valuation, as we said, closer to $6 billion, which would suggest to me that the Glazer family might just never had the idea of actually selling the entire club and giving up full control in the first place.
Obviously, this isn't the kind of investment we normally focus on, but that said, it feels like every year we're seeing a new record set for the sale of a sports franchise. I mean, just 2 years ago, my team, the Washington Commanders, changed hands for a then record of $6 billion. Then in March of this year, the Boston Celtics went for $6.1 billion. And only a few months later, that record was just totally blown out of the water by the iconic LA Lakers, who were sold for a staggering $10 billion.
We spent so much time this episode talking about the NFL and how much more valuable those teams are. And then just a couple of weeks ago, the LA Lakers deal came out and it just blew everything out of the water that we currently have seen. So I imagine that NBA teams will also get significantly higher valued in the time to come. But what I generally like about the idea of investing in sport teams, even if it's speculation, is the level of certainty, at least behind the product. If you invest in art or in luxury collectibles, there's always the risk that taste changes and something falls out of fashion. But football and American football, I just don't see either of those sports disappearing. And despite the huge value increases, I don't really see them going down in price either, at least not in the long term. The catch, especially with football clubs, though, is that an individual club can lose its relevance. If the team underperforms for too long, it can slip into a downward spiral that damages both the brand and also the business. And that's a risk you really don't see to the same extent in close leagues like the NFL or the NBA. And that said, Manchester United is such a massive brand that as long as they remain in the Premier League, it's hard to imagine them fading into irrelevancy. To give some perspective on the development of valuations, in the very first Forbes list of global soccer valuations, it came out in 2004, I think, and back then, United was still valued at $1.2 billion, while the average Premier League club was valued around $450 million. Since then, valuations have increased roughly fivefold. There are plenty of reasons for that, but if you had to boil it down to just one, it's the rise in both the number and the wealth of billionaires. In 2000, there were only 470 billionaires worldwide, with a combined net worth of $0.9 trillion. Today, there are more than 3,000 billionaires, and together they control an astonishing $15 trillion. And, if you're someone like Larry Ellison, in a matter of a day, you can make $100 billion if your stock performs well. So I think that speaks volumes. So at the end, you have a fixed supply of sport teams in the US leagues, even more so than in European football, and just a rapid increase in potential buyers of these teams. And if you ask me, even though it's a bet, that's a pretty attractive setup.
Yeah, I almost feel like betting on sports teams valuations is actually a way of betting on wealth inequality. As the rich have gotten richer faster than the rest of society, they have continued to basically bid against each other for the most exclusive things money can buy. And there's nothing more exclusive than owning a major sports teams. And I think we've seen that reflected in a number of ways when I talk about these exclusive things that are actually rising faster than inflation, whether it's private universities in the US, exclusive vehicles like Ferraris, art. All of these things have risen much, much, much faster than the general inflation rate. And I think, again, that is really reflected by the point that the people at the very top have compounded their wealth faster than others. And they're basically bidding against each other for these few finite things that money simultaneously can buy and can't buy. So as long as that trend persists, regardless of the underlying economics, I do think valuations for sports franchises will keep climbing higher. And I listed some of the biggest sales of sports teams in recent years a moment ago, but one club that I didn't mention was Chelsea FC, although it is pretty far up on the list. In 2023, Chelsea was bought by Todd Boehly and the investment firm Clearlake Capital for $5.4 billion. And it was the biggest sale of a sports team at the time. Without being a Premier League expert, obviously, to people who have probably gotten tired of listening to me talk about it throughout this episode, I would guess that Chelsea's a pretty good comp for United, but I don't know, maybe you'll tell me otherwise.
No, absolutely. I mean, on the pitch, Chelsea has been way more successful than United in the recent past, so probably fans of both Chelsea and United wouldn't agree here with us, but generally, both are part of the top 6 clubs in England, and I guess it shows that Forbes valuations are pretty accurate, even in these international sports like football, and football clubs are generally valued on a sales multiple basis. So when Chelsea was bought, the multiple was slightly higher than 5, although extra costs increased the price significantly, and thus also the multiple you ended up paying in the end. So considering that United is still the much larger brand and generates about $300 million more in revenues, which is quite significant for clubs of those sizes, I think it's fair to say that United would be valued much higher in a scenario of a sale.
When we think of potential catalysts for a Manchester United sale, what comes to your mind? Are the Glazers still interested in selling the rest of their stake? Or has it become less likely with the new minority holder who takes care of all the football operations?
Right now, there aren't really any real rumors about the Glazers selling their remaining stake. And if I had to guess, I would say they'll probably hold on to it for now and hope that the results on the pitch improve under Jim Ratcliffe's leadership. But there are some other angles that are quite interesting. One would be the new stadium project. Over the past year, there's been talks of building a brand new, quote unquote, new Trafford Stadium with around 100,000 seats instead of just renovating the old Trafford, which was basically the old stadium of Manchester United. And it would be $1 million undertaking. Radcliffe has already committed a few hundred million toward the infrastructure, but the city of Manchester has made it pretty clear, at least to my knowledge, that it won't foot the bill. So at this point, the project is still uncertain, both whether it will happen and even if it happens at all. But if it does, and if it should become reality, it would be a huge thing for the club and also, of course, the shareholders.
Stadiums are such a symbolic thing, sort of like the franchises they represent. And I'm not sure how well the specific economics of any mega stadium work out to be, but there's so much depreciation that can be written off for taxes. And more importantly, the stadiums become these economic hubs, revitalizing portions of cities that local governments will then want to incentivize by providing grants and tax breaks to help make them happen. At least here in the US, we see that a good bit. So they're almost more like these public-private partnerships in a lot of cases, aiming to build something that redefines an entire city's identity, which goes well beyond just basic calculations of profit and loss.
I must admit, I was a bit surprised when I heard about all these massive stadium projects, both in football and also American football in recent years. And it might not speak to my understanding of business, but I wondered why spend so much money on new stadiums when it could be better spent on players on the pitch. But it turns out that, especially in football, infrastructure investments are exempt from the usual financial regulations of the Premier League. So while technically every club is only allowed to lose about $140 million over a 3-year period, investments into stadiums or other infrastructure, they don't count into that number. And that's, no pun intended, quite the game changer, because not only do new stadiums now mean more seats and higher prices, but they also mean more events outside of football. So you can host global tiers for stars like Taylor Swift or Beyonce, and they bring in tens of millions in extra revenue, and all of that income helps with financial fair play compliance too, without counting into it beforehand. And it's not just concerts. I mean, United's proposed new stadium is meant to be part of a huge, massive regeneration project. We're talking about hotels, retail, restaurants, an entire entertainment district basically in the city of Manchester. And depending on how much of that development United controls, it could create an entirely new revenue stream for the club. And Real Madrid had recently built a new stadium for about $2 billion. And before the new stadium, Real Madrid's matchday revenue was about the same as Manchester United's. Now they make almost $150 million more per year. So if and when that new stadium comes, it would be a huge thing and potentially driving the stock price up significantly without any rumors of a sale of the club necessary.
These projects have become even more important in recent years since, as you told me, broadcasting revenue has actually been rather flat. So focusing on increasing match day revenue is a string they can pull and could help balance out the slower growth in broadcasting. And on that front, though, there is good news in the world of broadcasting, since international growth is starting to outpace domestic growth, especially for clubs like United with the biggest international fan base. There's maybe some real room for optimism there. But just going back to the catalysts for closing the valuation gap, I mean, do you see anything that could force the Glazers to sell their share?
Well, a second potential catalyst for the stock that leans more toward the possibility of the Glazer family selling is regulation. 2 years ago, the Premier League tightened its owners and directors test by adding human rights and sanction clauses. So they also introduced something called an acquisition leverage test, designing to stop the kind of debt-heavy buyouts that we actually saw with the Glazers and United back in 2005. So on top of that, an independent football regulator is expected to come in the following years. And this is just speculation on my part, but if the rules continue to get more strict, I think the Glazer family might decide to sell before the bar gets raised even higher, because that could downgrade the value of the spend, the value of United's franchise. Another, and again, very speculative tailwind for United's valuation and for a possible sale is the growing interest from the Middle East in acquiring not just players, but basically entire clubs. The pool of money there seems to be endless, and with Saudi Arabia hosting the World Cup in 2034, they're doing everything they can to establish themselves firmly on the football map. And to put that into perspective, the Saudi League spent only about $50 million on players in 2022, and just 1 year later, the figure had jumped to over $1 billion, or second only to the Premier League. Qatar is another well-known example. Back in 2011, they bought the struggling French club Paris Saint-Germain, which we already talked about, for around $100 million. Today, PSG is one of the biggest clubs in the world, valued at over $4.5 billion. So there's a lot of money coming in, and valuations, they can go sky high if you buy the right investment.
The entire situation reminds me a lot of Madison Square Garden sports, which I feel like I'm saying for maybe like the 5th time today, so I apologize. But when I covered it, the stock traded at about half the valuation that Forbes gave it, which maybe sounds familiar here. You also had a fairly unpopular owner, but no immediate catalyst that would suggest that the team would be sold anytime soon. And in that aspect, it's almost similar to the investment thesis for Smith & Wesson, which is a company we covered a few months ago, where you basically have to wait for a specific event to happen. And then in the meantime, there's not really any hope for organic stock increases. In other words, the business is not compounding. Retained earnings are not being reinvested in a way that continue to grow the earnings per share consistently over time. With Smith & Wesson, though, at least, you would have actually received a dividend while waiting, which you don't hear. And with MSGS and Manchester United, like I said, that's just not the case, which makes the opportunity cost even a little bit more painful to bear if, again, those retained earnings are not really compounding. And then you also have the asymmetric risk of a club actually getting relegated and then that causing them serious financial trouble.
The idea of owning a part of Manchester United is just really interesting. It's not just a top 10 franchise in football. It's really up there in the top 3 and arguably even the biggest one. And that reduces a lot of the risks involved just because there will always be interest from investors in owning Manchester United. When United performs badly, it might even get more attractive because the likelihood of the Glazers selling increases, and I really don't see a lack of demand for that club. But an investment in United is essentially a bet that someone will come in, pay more, and thus move the stock price drastically and most importantly, sustainably. Even on-pitch performance, everything that moves the stock doesn't make it a compounder. Like 1 year later, they might not be in the Champions League anymore and the stock goes back down. So that just makes it a pretty difficult investment in its nature. So when you look at the stock chart, it's a wild up and down. It actually looks very similar to Madison Square Garden stock. And in contrast to MSGS, though, United owns its stadium and the land, so you might argue this serves as somewhat of a margin of safety. However, selling it would be a very complex process, and it's incredibly unlikely. Even in a scenario where you build a new stadium, the Old Trafford would just be repurposed instead of sold. So yeah, if we assume United can close the valuation gap, or let's say 80% of it in the next 3 years, you would look at a 3-year CAGR of about 20%. If we assume it only happens in 10 years, the CAGR is just 5%. Although, to be fair, valuations are likely much higher at that point. Still, today I just don't feel like a bet on United would be our best option. I'll keep an eye on United's season and how the stock reacts, but without a clear catalyst in sight, I wouldn't suggest adding MANU stock to our intrinsic value portfolio at the time.
If this thing spit off enough cash to do some serious stock repurchases, that might get me interested enough to consider it, since there'd be no plausible way for the valuation gap to close without a sale of the team. But otherwise, without some special insights in the Glazer family, it just feels like you're signing up for indefinite investment uncertainty without any of the non-financial perks of owning a sports team, let's say. And I honestly think a lot of the value comes from being able to show up to the games, watch from a private box, fire the coach if you don't like them, or just giving input on what to do with certain players. That control, that fame, the clout, all that stuff are really what you're paying for as somebody who's buying a majority stake in a franchise like ManU at $6.5 billion. And as minority shareholders, you're just not getting any of that. So the question is, should you buy in at the same valuation? It's almost like you need 2 different share classes of stock for a company like this. And so from an investment point of view, I do think this one is pretty easy. I agree with you that we should probably pass. And I guess the more interesting question to me is, what would have to happen for you to find the stock more compelling?
Well, first of all, I think one interesting part about Manchester United and their owners is that a lot of the value that you said would be there for the owners because you basically own a sports team like Manchester United. It's not the case with the Glazers. They don't show up to a private box. They don't even go to the stadium because the hate for them is so big that they're being followed around the stadium. So they don't even show up. So I think a lot of the prestige and the benefits of owning a club like Manchester United are not really there for the Glazer family, which might be somewhat of an incentive to sell the club rather sooner than later. I mean, otherwise, share buybacks would just be a dream. And while I'm not really a dividend guy, even if United pay me a dividend of 4 to 5% while I wait for the club to be sold, or for the on pitch performance to improve sustainably, going back to the Champions League, maybe even surviving the group stage, or perhaps even just having a Super League format, and even just is probably a bit of the wrong wording here because that's probably the least likely catalyst to realize. But all of that would make the investment case just so much more attractive. And it would be similar, as you said, to the Smith& Wesson investment case, just with a much more attractive asset behind it, at least in my opinion. But I consider both buybacks and significant dividends as highly unlikely if you look at the financials of Manchester United and where the club stands. And with that, I would say both of us have now covered sport teams. We've covered an NBA team, an NHL team, and now also a Premier League team. If we can get our hands on an NFL team, we probably will do another episode, but otherwise, I think we're good for now. So, how about you give us your hints for the next episode, which I would assume has nothing to do with sports, but brings us back to the good old compounders?
Yeah, we do love those compounders. And yeah, I mean, this next company is one of those behind the scenes toll booth businesses that we like to see. If you've ever applied for a mortgage, this company was almost certainly involved. If you open your credit card app, you'll probably see a score from them, assuming you're in the US. And if you've been an investor in the company over the last few years, well, let's just say you have done very, very well.
Well, we have to hope that it's continuing in the future because we are not yet shareholders. All right, today I will close it with a quote by who else? United's legendary coach, Sir Alex Ferguson. He said, "We had a virus that affected everyone at Manchester United, and it was called winning. Unfortunately for United fans, the team has been cured of that virus for a long time. So let's hope it will come back soon, and we will see you again next Sunday."
The takeaway, though, is that the more capital intensive and lower quality assets were spun off from MSGS into separate companies, leaving MSGS as a fundamentally more attractive company today than it was a few years ago before the spinoffs. That does make it trickier to assess MSGS's performance over time, since it's not an apples to apples comparison to look at MSGS today versus its results in 2018 when it owned local media rights and The Garden. And so the Dolan family sits at the intersection of these companies since they controlled the original parent company, with 69-year-old James Dolan serving as the CEO and executive chairman of MSGS, MSGE, and Sphere. As MSGS's CEO, he recently signed a contract extension through 2027 that's paying him at least $1.6 million per year, with a target annual bonus of 200% of his salary. He's also eligible for a long-term incentive plan that could pay him another few $1 million.